everyone. Welcome to this week's Nexus Mutual Community Call. Great to have you with us as we dive into the latest in the Nexus Mutual ecosystem. Let's review today's agenda. As always, Brave New DeFi will lead a discussion on DeFi yields and risks. We'll then take a quick look at the new listings in the Nexus Mutual UI. Plus, we'll have some governance and foundation updates. Then there will be a special segment with a guide for anyone with cover or staked NXM in V1 contracts. We'll wrap up with an open forum for questions, comments, and info on claiming your POAP for attending today. Let's start with the state of DeFi. Brave, how are things looking in the space right now?
Yeah, I think things are still kind of sideways like we talked about last time. But yeah, good morning, everyone. I'll provide an overview of the current market and the yield environment in DeFi before we get into some other updates today. Since our last call, the price of Ether has ranged between $2,100 and $2,500, with today's price hovering around the middle of that range at $2,340. ETH price action hasn't been very strong, and the market isn't incredibly bullish at the moment. If you look at ETH perpetual futures, they kind of indicate that we're kind of flipping more away from bullishness. So funding rates across major exchanges are slightly negative, which means that major centralized exchanges and on-chain perp markets are paying people to go long ETH to attract more traders into the market. We've seen a lot of talk in the last few weeks about low gas prices on mainnet, positive ETH issuance on a yearly basis. And since there's insufficient ETH being burned to create a deflationary supply, people are concerned about this. And there's been general worries about ETH price action in the short term. There's been a lot of different discussions about why that might be. But a lot of that is just kind of noise that's on crypto Twitter. People have complained about the Ethereum Foundation selling ETH. People have complained about this and that, about the advent of blobs lowering gas costs across the ecosystem. Again, a lot of this is still noise. I think that everyone expected the ETH ETFs to really boost prices to new highs, but crypto markets are still closely correlated with trends in traditional markets. And in traditional markets, we've seen growing concerns about a potential recession. The August jobs report just came out last week. That was released by the United States Department of Labor, and that indicated a weakening labor market. And that report itself, when it came out, triggered a sell-off in traditional markets, with tech stocks being hit the hardest. And typically, crypto markets are correlated to tech stock performance over time. As I shared in our last community call, there's a lot riding on the United States presidential election in November, so I'd expect price action to remain largely the same it is now, until mid-November when we kind of see the results of that election. How has the market action affected DeFi markets? Well, we've lost roughly $4 billion in overall TVL locked in DeFi since we had our last call, but the benchmark lending rates are still in the same median range. For stablecoin yields in lending markets with rewards offered, the median yield is about 4.15%. This is down about 10 basis points from our last call, and the median stablecoin yield for based interest rates in lending markets is 3.68%, which is down 20 basis points since our last call. The highest yields in lending markets are largely across notional V3 markets, Morpho markets, and Aave's Go yields. The DAI savings rate remains at 6%. It's still higher than the median yields that we're seeing for stablecoins in lending markets. And that's still the North Star for stablecoin yields. When MakerDAO rebrains to Sky Money here in the next week or two, we're going to see the new stablecoin being offered by MakerDAO or Sky, USDS, that's going to launch. And the Sky savings rate, the SSR, is going to be 6.25% as well. So we'll see that savings rate bump up a little bit to attract more capital to the new USDS stablecoin. Like I said, that upgrade should be happening in the next couple of weeks. So while there are still great yield opportunities available in DeFi, yields are down across the market. Protocols like Contango still offer double-digit yields, but that involves using leverage. So definitely use caution if you're using leverage in the markets. On-chain risks are still causing losses in DeFi, with the PenPy hack last week kicking off September with a $27 million loss due to a reentrancy vulnerability that was exploited. The funds have not been returned, and it's looking likely that funds are not going to be recovered for the PenPy hack. I've been working on a few research projects as part of the product and risk team, one of which is a database of all of the exploits that have taken place in the Ethereum and EVM ecosystem. Based on the data that I've assembled so far, it's looking like reentrancy attacks are one of the leading causes of losses in DeFi across the years. But looking at Immunify's reports, they just released their August 2024 report not too long ago, and that highlights total loss of a little over 15 million due to hacks and fraud across 5 specific incidents. Most of the losses in August were due to hacks. That represents a 38% decrease from August 2023, when registered losses were 24.5 million. And it's a 94.5% decrease month over month. In July, there was a big exchange hack for an Indian crypto exchange, which made up for most of the volume in July. But in August 2024, DeFi surpassed CeFi with 5 cases occurring, representing 100% of the total volume of lost funds. Hacks continue to be the predominant cause of losses compared to fraud. A total of 15,082,000 were lost to hacks across 5 incidents. No fraud events were reported in August based on Immunify's reports. The most targeted change in August of 2024 were Ethereum and the Binance Smart Chain. That represented 100% of the total losses across targeted chains. So if you're active in DeFi, you're still exposed to these risks. Be sure to be safe out there and buy cover when you can. It's still the easiest way to protect against on-chain hacks and economic risks. With an overview of the yield and risk landscape wrapped up, let's talk about some of our new listings. In the last 2 weeks, we've added a few new listings. We've added PancakeSwap protocol cover, Beefy and Velodrome bundled protocol cover, and our newest product type and its first listing, the base DeFi Pass. If you haven't seen some of the announcements we've put out with OpenCover about the DeFi Pass, I'll provide an overview of the product. Since bundled protocol cover has been so popular, we wanted to explore a new product that could provide users with greater flexibility. I know people always want to buy cover and chase yield, which means moving your funds into the protocols with the highest available yield. So instead of having to buy several covers to protect your position, you can just buy one DeFi Pass to protect your funds across several protocols. So we're starting with the base DeFi Pass, and this is designed to provide protection for the leading protocols in the base ecosystem. OpenCover is going to be selling and distributing this cover in their UI. Because OpenCover sells cover on L2s, gas fees are negligible, and the base DeFi Pass can be used by anyone, whether you have $500 or $100,000. So since this product and listing are both new, we're working with OpenCover to conduct beta testing of the base DeFi Pass to get feedback from users, so we can improve the UI and make any product adjustments before a larger launch based on the feedback we receive. So if you want to take part in the beta testing phase, head to the OpenCover Twitter account and access their type form, where you can take a short survey and request access. So the base DeFi Pass allows you to protect yourself across 8 leading protocols, including Aerodrome, Beefy Finance, Compound V3, Extra Finance, Moonwell, Morpho, Overnight Finance, and Uniswap V3. This also includes the sub-protocols for these protocols. So if it's a yield aggregator that's built on top of others, you're going to be covered across the full stack of risk. So if you're looking at a Beefy vault, for example, if you're depositing in a vault, if there's underlying protocols using that strategy, you'll be protected against hacks in those protocols as well. So if you were to purchase 25,000 of base DeFi Pass cover, you could deposit a total of 25,000 across these protocols. So to be clear, I don't mean 25,000 in each protocol. What I'm saying is an aggregate total of 25,000 across the protocols. So that could be 10,000 in Morpho, 10,000 in Extra Finance, 2,500 in Moonwell, and 2,500 in Beefy. That would make up your total covered amount. I'm really excited to see the base DeFi Pass go live, but First, we'll do some testing, get valuable feedback from users before making a larger marketing push, and then we'll have more announcements on the base DeFi Pass here in the next month or so. So yeah, like I said, head over to OpenCover to their Twitter accounts, fill out that type form, and check out the base DeFi Pass. In the next week too, we're going to be adding some more listings, so keep a lookout for some of those announcements. I also wanted to share an update about a project that our engineering team is working on. So we shared an update on Twitter yesterday about a project that the Foundation engineering team has been working on for the last week, and they'll be working on this week, probably into early next week as well. So since V2 launched in March 2023, some members still haven't withdrawn their NXM they had deposited in the V1 contracts. The Foundation engineering team is working to deprecate the V1 smart contracts and remove support for the V1 smart contracts in our UI, so they don't have to maintain that any further. As part of that project, they are claiming NXM that's held in the V1 smart contracts on behalf of members and covering the gas cost of the transfer back to each member's wallet. In total, there's a little over 2,000 members who will see some NXM balance transferred to their wallet over the next week if they haven't already. The engineering team has already claimed and transferred V1 NXM related to cover deposits, claim assessment stakes, and staking rewards. The final part of the project will be to claim and transfer NXM held in the V1 pooled staking contract, which is where risk assessment stakes were held in the V1 protocol. Our engineers estimate this will be completed by the end of this week or early next week. So if you see NXM appear in your wallet, you can always verify the legitimacy of the token by checking it against the official token contract address, which can be found at sdk.nexusmutual.io. You can also go on CoinGecko and find the contract address there. Just a reminder that the NXM token is only on Ethereum mainnet. It's not on any other network. If you have any questions, feel free to reach out to us through the contact form on the website, or you can open a ticket in the Nexus Mutual Discord server. Yeah, and on that, I see that we've got Hugh on the call, so let me just get him up on the stage so he can provide his Foundation update. Just 1 second. All right, I'll hand it over to you, Hugh.
Hey everyone, hope you can hear me all right. Brave, sorry, it just says I'm a listener. Yep, okay, cool. Thanks, Sam. All good. How's everyone doing? Hope that they're doing all right. I guess a few updates from my side. Was going to run through the V1 deprecation, but Brave's just mentioned all that. So yeah, just in case you see NXM coming in to your wallet, that's probably where it's come from. We're just moving that so it's just a bit easier for the engineering team and a bit of a smaller code base to manage, especially in the UI side. A couple of other things on the engineering side of things while we're on that topic. So I guess the main pieces that we're working on at the moment, there's definitely a whole bunch of UI stuff. So we're testing claims and staking UI at the moment. So that's kind of progressing quite well. There's a couple of back-end pieces that we're working on as well. But I guess more on the protocol like enhancement side of things. The two main ones that are probably worth mentioning cover edits is continuing along, and we're also going to be picking up capability for limit orders on by cover. So that's going to be quite cool, where you can essentially sign a message and someone, and if when the capacity becomes available, someone can complete the order, and essentially it also allows gas to be paid on behalf of users and a few tricky things like that. So there's quite a lot of cool capability with that one, but we're going to be picking that one up next once we've got over some of the UI pieces and this V1 deprecation. So that's kind of the main stuff on the engineering side. I guess on the business development side, there's quite a lot of I guess bespoke or tailored quotes that we're working through at the moment. Definitely some staking, 2 or 3 staking quotes we're working on, some new product stuff we're working on. We're also supporting OpenCover with the DeFi Pass rollout as well, which is pretty cool. And we've also been having some interesting discussions with potential syndicates more in the real world side of things as well. So I think a lot of people are starting to realize what what Nexus is capable of and what they can use it for. So not just covering crypto risks, but kind of also being a platform which they can use to distribute their own cover products, etc. So having some very interesting conversations on that side. So definitely early stage, but I think people are starting to realize how flexible the platform actually is when you kind of get under the hood and look at the details. So I'd say quite a lot going on across the engineering side as well as the BD side. It's definitely, as I've said before on numerous of these calls, we're definitely kind of focused on making sure that the protocol has the particular capabilities in terms of what we need to distribute cover, but it's all about distribution and growing out the syndicate base and the cover products that we offer. So really excited to see things like Open Cover do the DeFi Pass stuff, as well as the transaction cover that they've done. And we're also got some definite interest on new clients for the fund portfolio cover that we launched with Dialectic. So there's quite a large range of covers that we offer at the moment. And we're also working on a whole bunch of these kind of tailored deals and things coming along. So there's people want us to cover different things, and they're exploring if we can do it or not, which is great. So there's a lot of detailed work behind the scenes on that type of stuff. But I think that's kind of gives you a good overview of where the foundation teams are spending their time. Happy to take any questions on that.
All right. If there's no questions, then I can move on to some governance updates. So we've had a little bit of activity here in the last several weeks, definitely since our last call. So I wanted to provide a quick update on some things happening on the governance forum and the recent snapshot vote. So to start, let's talk about NMDP 8, which went up for vote on August 29th. This vote was to decide whether or not we should onboard Karpathy as the DAO Treasury Manager for the mutual. So after a 5-day voting period, members voted with 174K NXM to approve the proposal. So after this passed, we've started working to onboard Karpathy to the DAO. They are configuring an avatar-safe multi-sig that has the Gnosis roles modifier on it. So what they're doing there is they're adding whitelisted strategies that they'll use in their management strategy, and that avatar safe is going to have the same configuration as the DAO treasury safe that we have, but Karpathy is going to be able to manage within that sandbox, within those whitelisted strategies. They'll be able to move funds around without getting signatures from everybody. So it's a permission system where they're allowed to do certain things, but you restrict it based on that whitelisted permission. So we're going through and getting that set up, making sure that everything checks out, verifying the whitelisted strategies. Our engineering team is currently working with Karpathy 2 to whitelist strategies within the Nexus Mutual Protocol as well for staking and delegating and everything, and to have the ability to use ETH to mint NXM in the future if we have investment returns and want to convert that back into NXM. So they're working on getting onboarded. If you missed this proposal, Karpathy is going to be managing a total of 6.5 million in DAO Treasury assets. Their proposal included the following mandates: to diversify out of NXM into ETH and ETH derivatives for a total of $2 million, diversify out of NXM into stablecoins for $1.5 million, and to manage a total of $3 million in WNXM and NXM to generate yield. For their services, they'll charge a 0.5% management fee that's going to be charged in NXM or WNXM and collected in monthly installments. This will be a 0.5% fee of the net asset value of the assets in the treasury, and it's going to consider the asset prices at the end of the month. They're also going to levy a 20% performance fee on the yield generated over the last month, and that'll also be charged in NXM or WNXM in monthly installments. So once they're onboarded and they begin to manage the DAO treasury, we'll share an update. Keep an eye out for their reporting on the forum in the coming month as well. The investment committee has also published their July newsletter, which highlighted the capital pool's outflows and the investment performance during the month of July. In July, the mutual saw a 1.6% reduction in the capital pool, which again is largely due to RAM redemptions. These withdrawals have continued to slow down pretty rapidly. So there was 1.8K ETH that was redeemed in July, compared to 2.3K ETH redeemed in June and 2.8K ETH that was redeemed in May. So this is indicating a decreasing number of tokens wishing to exit. There has been a small positive FX impact as a result of stablecoin holdings due to the slight drop in the ETH price, as well as very good results from cover fees and investment holdings. The active staking investments yielded between 2.8% and 9.3% APY. The high yield on the Rocket Pool portion is a result of an anomalous deviation in the ETH-RETH exchange rate at the end of July, the impact of which is likely to be reversed in the following months. The Aave USDC debt position, collateralized by ETH, produced a net APY of 1.1% on the ETH that we have in Aave v3. The capital pool overall earned 3.2% APY based on the capital pool value over the course of the month of July. The higher than average result was driven mainly by the RETH exchange rate. Other updates from the investment committee: the first ST-ETH to ETH divestment transactions have been completed at the end of August with the help of the Foundation engineering team, totaling 4,393 ST-ETH. They're working on documentation for future transactions as well. This is to ensure that there's enough liquidity in the RAM for redemptions and to make sure that we can pay any potential claims that come up in the future. The Stakewise Chorus 1 and Ether5 proposals have been implemented in the Enzyme Vault, so the vault now holds 1,515 wrapped ETH, and 4,989 ETH has been deposited with Chorus 1. We're also working with Enzyme and Chainlink to incorporate the ongoing unclaimed rewards from the ETH staked with Kiln into the NXM-TY Oracle. And NMPIP 227, the proposed framework for repaying the Aave USDC loan, has been approved. And so far, there's been several repayments that have been made. That debt is now down to 5.5 million from the original 6 million loan that was taken out. The process for making repayments and collateral top-ups, if required, has been documented for future actions as well. And then I wanted to provide an update on the community staking pool. So in May of 2024, there was a vote. Members voted to create the community staking pool. There was an old proposal when the mutual did a buyback of WNXM back in late 2021, early 2022. And there was a portion of WNXM that was bought back. And so members voted on what to do with it. One of the outcomes was staking some of that NXM within the protocol to open up capacity and then earn yield on the NXM. So this proposal, this NMDP5, was a result of that past proposal. So 57,607 NXM was staked and delegated from the DAO Treasury to the community staking pool, where it's used to underwrite cover and earn the DAO Treasury NXM rewards. So I just posted an update. It's the first of many biweekly updates that I'll be posting on Pool 23's exposure and performance. You can find that on the forum. We've initially staked 30,000 NXM and delegated that to Pool 23. The remaining NXM that's held in the community pool multi-sig is earmarked for staking and has been set aside to support other staking pools that need help with initial bootstrapping, like OpenCover's Pool 8. So the community staking pool delegated 3,000 NXM to Pool 8 to support the launch of OpenCover Transaction Cover, a new cover product that is designed to provide short-term coverage for request finance users. And this cover product can be applied for other wallet providers in the future as well. But OpenCover has been, they developed transaction cover and they've been selling quite a bit of that to date. I think they're going to be working on some marketing announcements this week as well around the request finance deal. So keep an eye out for that. For the exposure, you can see the exposure listed out. The current exposure across the community staking pool is about 4.77 million in active cover across the listings that we've outlined. The top 5 listings by exposure are Aave v3 protocol cover for 1.11 million, Dialectic Moon Phase Fund portfolio cover for a little over $1 million in exposure, Dialectic Chronograph Fund portfolio cover for about $671,000 in exposure, Hyperliquid protocol cover for $424,000 in exposure, and Pendle protocol cover for $344,000 in exposure. NXM rewards, the community staking pool has earned 503.07 NXM, or roughly $27,000 in staking rewards, and 52.59 NXM in management rewards, which is around $2,800. So currently, Pool 23's active cover has netted the pool $20,914 in premiums, which are streaming as NXM rewards over each cover's cover period. The leading 5 listings that have generated the most premium for Pool 23 are the 2 dialectic deals, Pendle protocol cover, Aave v3 protocol cover, and Hyperliquid protocol cover. So you can see a breakdown of that as well. I put some updates there too, that the community staking pool is underwriting a portion of the base DeFi Pass cover listing as well. So as that product launches and we see volumes coming in through there, we can expect more yield to be generated by the community staking pool. I'm going to be posting updates for Pool 23 on the forum every couple of weeks. Keep an eye out for those updates. I'll also provide summaries on our community calls. I'll do the same for the pool that I manage personally, Pool 22, in hopes that some other pool managers can also post updates on exposure and everything to give delegates or people who are interested in looking at the mutual's exposure a little bit more detail on the forum over time. So those are the updates I have on the governance side. I am going to throw things back to Sem to provide an overview of the last week in cover sales. Sem?
Thanks, Brave, and thanks you. Let's look at the last week in numbers at Nexus Mutual. In the past week, Nexus Mutual members sold $3.4 million worth of cover, and members earned more than $15,000 in fees. The weighted average expiry period for these covers is 21 days. Total active cover stands at $73.6 million across various cover types, including bundled protocol cover, and fund portfolio cover, and staking pools like the community staking pool, Braves, and Hughes staking pools. You can explore all this data on the DAO-maintained covers data dashboard on Dune, and also check out the weekly digests at the Nexus Mutual forum. I'd like to also highlight that the retail mutual, which operates under our partnership with InShare, renewed their cover this week, contributing $3.1 million in cover sold. That is the week in numbers. Stay tuned for more updates. Next up, I want to touch on the Covering DeFi series. As you might have seen in the latest issue of The Hedge, our monthly newsletter, we have been interviewing DeFi builders, security experts, and protocol teams to foster discussions across the space earlier this year. And to plan our next season, we ran a short survey on X to get feedback on who you would want us to hear to host at future episodes. And most of the respondents voted for more interviews with DeFi protocol teams, and we're planning the next round now. We'd love for you to be part of the process, so if you haven't yet, please check out the latest issue of The Hedge at nexusmutual.substack.com and share your thoughts through our mini survey, which is included in the Covering DeFi section. Thanks again to everyone who has participated in our first survey. We're looking forward to hearing your ideas in this new mini survey, and we'll have some exciting interviews coming up soon. I would also like to highlight the Nexus Mutual Governance Reading Group's new space on the DAO website. The reading group has been active since the start of the summer, and we've already finished reading Governable Spaces by Nathan Schneider, and we also read the Open Problems in DAOs paper by Joshua Tan and other MetaGov researchers. Currently, we are a group of 10 volunteers from diverse backgrounds, DAO workers, freelancers, academics, and cooperative activists. Right now, we are reading Cooperation by Bernard Harcourt, which examines how cooperation influences social and political movements today. It's been a great discussion so far, and we'd love to have more people join us. You can check out the details and sign up at nexusmutualdao.io/governance-group. All right, now let's open the floor for any questions or comments. Feel free to raise your hand or drop your question in the chat. If there are no questions, you know where to find us. Please hop onto the Nexus Mutual Discord and ask our community any of your questions. We'll be happy to help out. As a token of appreciation for joining us today, we've got a PO app for you. To claim it, just open a ticket or DM me on Discord, and I will send you the mint link. Thanks everybody for joining us today and for your continued support of our community. Stay safe in DeFi, and we'll see you at the next call. Have a great week, everyone. Bye.
Thanks, everyone. Great to have you here. See ya.